A new era is upon us. Pulse has taken the world by storm as the leading Web3 social media. Beyond current features like casting, tipping, inscription trading, and earning, it's now elevating to the next level, on-chain.
Soil, a fully regulated, seamless link between traditional finance and the digital crypto world, offering secure returns fully backed by tangible, real-world assets.
The Credify testnet is live, so head on over to demo.credify.finance to see how you can effortlessly experiment with autonomous earning, NFT corporate bonds, Credi and X-Credi utilities, and Module X.
What's up, friends, ladies and gentlemen? This is your boy Jimmy. Hey, Joe, Imran, and a bunch of other people. Glad you guys joined. Hope you guys are doing well. It seems the market is in free fall. What the heck is happening? So let's decipher the market, and I would be very happy to share my thoughts on this. Would love to keep this live stream short to the point. If you guys have any questions, please do let me know. Happy to address all of them. So what's actually happening here? And also, let's tackle this a little bit from a market psychology perspective to start with. This is a range, and Bitcoin has been in this range for quite a long time, more than 100 days to be exactly here, 104 days and 1 hour. Bitcoin has been moving in this range. Since the rejection from Friday, I see a lot of fear and anxiety. It's kind of funny because Bitcoin was trading in May around the same level. Here in April, around the same level. The anxiety and feelings you observe here at this specific price action is very different from the moment we started to rally up from, starting from 11 May to 19th May. It made a really nice bounce to this yellow zone, to this mid-range. And it was basically the same price, different time, but yet a very different sentiment. And what often kicks in is, of course, you know what, recency bias. So whenever we revisit range high or revisiting range high and we decline, it basically opens the door to more potential damage. And we don't like that. So a lot of biases will kick in then, such as negativity bias, recency bias, and we create scenarios where we easily see Bitcoin dropping to even lower levels. But this is then again the time to apply a few simple steps. One, zoom out, obviously. Second, remove everything. Let me visit a different type of chart. Blix is a good one. Yeah. You don't see any price action, blanco, right? This is how you trade. You don't see anything, you just buy and sell. Jokes, my friends, just making jokes. That's not the way how we trade. What we see here are the MAs, the EMAs. Let me pull the major ones. 200 MA, the 200 EMA, and then ask yourself, what the heck am I seeing here? I don't see any price, I don't see charts, I don't see candles, I don't see bar patterns, I don't see anything. I just see two lines. What did they do? Ask yourself, what do they do? They're curling up, they're moving to the upside. There is an uptrend going on based on the 200 EMA and the 200 MA. What would worry me is when an EMA or an MA for that matter, when you see that the MA is stagnating, so meaning it cannot keep up with its momentum here. So this is actually stagnating. It's actually kind of a pause, and same as here. So what is this actually? How would you? This is a non-trend zone, basically the same here. And if it comes from an uptrend, it's actually a warning signal. It actually tells you, guys, warning, warning, we cannot keep up this uptrend. We cannot sustain this. And this is actually an early warning that a reversal might happen. And the same could be applied for this zone here. So when we zoom out, what do we see? On the EMAs and the MAs, especially the major ones, we're still actually in the uptrend. Also, if you go to the oh, I was too quick. The hands are today too quick. Who has this issue as well? The 12, especially the 21 EMA on the weekly, is also like a really significant level, I reckon. And still, this looks pretty good. It's still curling up. It's still heading, to the north. So all with all, I'm not that worried, to be honest, when it comes to Bitcoin. Ideally, I would not like to see a close. So the blue line here is the 21. Excuse me, the red one. So this red line perfectly aligns, or almost perfectly aligns, with the monthly support resistance level, meaning also perfectly aligns with this range. Ideally, we don't close below 21 EMA. We don't close below 60K. So what's next, actually? What's next? Everyone is asking themselves, what's next? Is this a free fall that will continue, or is this a will stop? And I would love to take you guys back a little bit back in time, and let's check the ranges. Bitcoin was ranging here for a quite long time. Normally, Bitcoin ranges, let's say 70-80% of the time, and then it makes a move to the upside. So if we would apply, where is it? Yeah, the anchored. Oh no, wait, sorry guys, that's my mistake. I should use this one. Here. So this was a range for a quite long time. What I found interesting here is the moment it aggressively reclaimed the point of control, we saw really good up movement. If we would apply basically the same methodology here, same as here, right? So like playing a little bit with the point of control, and then it resumed to the upside. Basically the same here, but unfortunately, today, I had to hope last week, and my hopes are kind of crushed, however you say it. The point of control, so basically which aligns with this yellow zone here. Let me take this away. We closed basically below the point of control. Normally, I would wait for 1 or 2 daily candles or a few 12-hour candles to really get that confirmation. But this is indeed not this is not really strength, to be honest. Let me add this here. And if we go a little bit to the lower time frames. So this is basically the mid-range. As you can see here, like resistance, resistance, resistance. I was quite optimistic when we bounced from here. Also a little bit optimistic here. I was here starting, honestly, I wasn't really that optimistic. So this movement was, I found it like quite surprising. My interpretation of this price action here was actually weakness, because the bounces were getting weaker. We got a really good bounce, rejected here. I consider this as a hard rejection, meaning the next time we're going to revisit, if we're going to revisit this same price action, the same price level around 72K, bear in mind that most likely there will be some pushback. So What is this now? Is this a swing failure pattern? So it took out all the lows here, or could this be a a bearish retest? On Discord, I shared my thesis here a few hours ago. A bearish retest until proven otherwise. At the moment, we might see a bullish engulfing candle on the 4-hour. If we would close this, perhaps, most likely, well, not most likely, but there's like a serious probability that we could reclaim this yellow zone again. If that's the case, I see Bitcoin again easily climbing up towards 72K. But it's actually now too early. I mean, we still have to wait 1 hour and 30 minutes before Bitcoin prints a confirmed 4-hour candle. If we close below this yellow zone and the market confirms that this is a bearish retest, I'm afraid that we would see like lower levels around 64K. And eventually maybe taking out these lows here around 60K. And then again, I am not worried at all, to be honest, if we revisit 60K or even taking out these lows here. I know if this happens, there will be like max anxiety in the market. But still, nonetheless, it's in a goddamn range, right, for 100 days. So there's no point for me to be extremely bearish unless you are overly positioned when it comes to altcoins. Altcoins, they don't look really that good. We see what is happening. BTC dominance without the stables, so stables excluded, is going to the north. And this is a chart I frequently have shared on Discord. It's a meme chart. Let's start with that. However, it does give us some really good insights. Dominance up, Bitcoin down, altcoins suffering. So what I would love to see here around this yellow gray area is a rejection, so we can trade altcoins again. Ethereum BTC, honestly, this candle here, induced some optimism, but this is still another lower high. I will actually, honestly, kind of optimistic when it comes to Ethereum, and I am prepared to swap some of my Bitcoins into Ethereum, but now this is not really the time. Ideally, I want to see Ethereum taking out this high here, because this is not convincing, unfortunately. We do see like a triple bullish divergence. It's kind of rare to see such a divergence on Ethereum, especially when the divergence is actually originating from a oversold area. But still, like, I see this and consider it a valid bullish divergence, but I'm not too happy with like the recent price action, so I'm a little bit careful with swapping into from Bitcoin to Ethereum. I do believe that the time is not ripe yet, and I have patience. I mean, this is a weekly candle, so before a divergence such as this one plays fully out, 270 days. It would take us maybe 270 days before this, before we see like the actual impact of this divergence, like 270 days, 17 days, or even more. So this is a waiting game, and I'm not in a hurry at all. So if this is a opportunity, I believe so. If you are not a intraday trader, I believe that buying a little bit here at range. Imagine you missed out on crypto the entire year and also last year, and you want to build a position. And I would have, let's say, $100,000. If that would be the case, I wouldn't mind to add here a little bit of Bitcoin. Let's say I would maybe allocate like 10 or 20%. Me personally, that would fit into my risk tolerance, my risk profile. However, I would have also set some stink bits around this level, the monthly SNR, and as you guys know, the 21 EMA is also perfectly aligned with this yellow box, and I would set some bits here as well. So yeah, I do see this as a opportunity. I understand that a lot of altcoins, they are suffering. Let me check a few of them. Let's make fun of the altcoins. Here, this is like pain, right? Ape broke the trend line. What is this? Aether protocol. It's one of my high conviction bets, and honestly, it doesn't look really that beautiful, unless it can resume again into the upside and reclaim this gray box. What do we have here? Bitcoin dominance. Here on the 12-hour chart, nice kind of candle formation. This is the bullish divergence. So there's some hope. There is some hope. This could be it's not like a textbook swing failure pattern, but it does give you like the same story as of a swing failure pattern. What else do we have? This doesn't look really beautiful at all. Change finance. I really don't like it that it got rejected from this gray zone here again. As you can see, even Chile's altcoins are suffering. Bitcoin up, Bitcoin dumping, Bitcoin dominance up. So this does represent a opportunity. However, I believe the best time to scale in is when you see strength, and I'm not seeing strength as of yet. Ideally, we re-enter this dark gray zone if Bitcoin dominance, gets rejected here, and we see some potential reversal signs on Ethereum. That would be a really good moment to scale into altcoins a little bit. I just believe that if you would like to play the high probability game, buying now is actually risky. I would love to see a higher probability setup would occur under the condition that we see a higher Bitcoin dominance, and then it tops out and heads lower. So yeah, it's a good opportunity. For those who are listening and watching this video, this live stream, we do have a newsletter, free. There's no cost at all. It comes every Tuesday, sometimes Wednesday, or sometimes Thursday. It contains like different kind of information and content. Sometimes it's just TA, sometimes it's FA, sometimes it's trading psychology, sometimes it's about ETFs. So every week there's basically a different topic. Sometimes it's about a gem we share. Sometimes it's a breakdown of a of altcoin in the top 100 or 200. I would say definitely go and subscribe to this weekly newsletter. So, ladies and gentlemen, do you guys have any questions? I did this video for you. If there's any questions, drop. Otherwise, we will call it a call. And also smash that like button. It's like what our friend, loyal friend Imran is saying. Smash the like button. You must smash it so hard that you almost destroying your own keyboard. Smash it. Just like this. Smash it. Or even louder. Smash it. I have kids sleeping right now. Hope they won't be disturbed by my foolish behavior. There's actually nothing more to say, nothing more to add. This is just a waiting game. I have prepared a long setup for the Discord community. Let me see where it is. However, not shared yet because I'm still waiting for confirmation. I will give you like one tip, one suggestion, especially when you use the RSI. When the RSI is crossing, like let's say below the 30 level, it means actually we're in a danger zone, and it's not really a smart move to buy something when things are in a danger zone. However, if the RSI is in a danger zone and is in the so-called like oversold area, and then it crosses up again, the RSI, the 30 level from below, right? So it crosses up like this, right? It indicates a potential bicycle. So this is the way how Wallace Wilder, the inventor of average true range, the inventor, the creator of the RSI, how he used the RSI. Additionally, what you could do is also have like this trend line. If we break this trend line, it means we're going to see a reversal. I really love this candle. We still have 1 hour and 20 minutes to go before we see a candle close. I unfortunately do not have that much time to stay here live with you guys to do some real, live trading. However, if Bitcoin closes like this, or when I think Bitcoin will close like this, and it, both basically overshadows this candle here, I would say the probability that this is a bearish retest would be maybe like 30-40%, and most likely this would be a swing failure pattern, taking out all these lows here, lows here, lows here. And still, it's a little bit too early to execute this trade. So it's all about waiting for the right condition and then executing. I might regret maybe for not executing it right now, but that would give me the best, the highest probability scenario. Let me get rid of this. Yeah, so also on the 1 hour, you can see that it crossed the 30 level. So on the 4 hour as well, 6 hour as well. Here it's like, curling up again. So yeah, honestly, if someone would tell me, hey, Jimmy, what would you do? Like long or short? And you would like put a gun and say, and he would say like, I'm going to trigger it right now. I'm going to shoot you right now unless you give me an answer. I would say I would long here. I would definitely long here. But God thank there's nobody with a gun, unless you guys have a gun and trying to threat me. If you guys would threat me, then I would say, well, I rather prefer to go long here than rather than short, as I do see like a potential reversal occurring right here. Let me check quickly the S&P. The S&P is also like I wouldn't say like in the danger zone, but like there are like a few players, like a few stocks, basically dominating the S&P. I think like the 4 or 5 of these stocks representing 60-70% of the S&P, which is like kind of worrisome. I mean, if those 5 do bad, then the S&P will suffer as well. This one is definitely something you want to put on your radar, especially tomorrow with what was it, like with the PPI and the FOMC at I think 8 o'clock Dutch time, 6 o'clock UTC time. The ideal scenario is, of course, a decline, but I'm not sure about that, to be honest. I do see strength in this chart, especially like starting from here. You do see, low, higher low, high, and again, like higher low, higher high, higher high here, higher high, higher high. So overall, this looks not that bearish, actually. Here, it is not like a chart that displays a lot of bearishness. So yeah, set your alerts and make sure you reduce maybe your position size when you're trading during FOMC. I would say like you can easily trade FOMC if you have an edge for that. If you don't have, better to stay out. Stay on the sidelines, and or heavily reduce position sizing. Let me check. 26 minutes. Let's call this a call, ladies and gentlemen. Thank you so much, and thank you guys for the questions. Thank you for the love, and smash that like button. Okay, smash it with love, but also with some aggressivity. Like, be aggressive with that smash, with that button. So smash it for me, smash it for the burpness, smash it for you yourself, guys. Again, I really think the primary trend is still looking good. Of course, secular trend extremely bullish. We might see here a sign of the first reversal. If the RSI stays above the 30 level, that would be like a really good sign. I would worry if we would take out this low here on the RSI, and that would definitely, or most likely, induce a lot of pain towards 63K, 60K. But then again, zoom out. What do you see? Just a range, 104 days. I mean, what does it matter, right? 104 days in a range, or 120 days, or 130 days. On the grand scheme, this just looks pretty good and pretty healthy. Until the next time, thank you so much, ladies and gentlemen. Hit that like button, and see you next time.